Yes, I think the ship is starting to turn after a lot of work on the fitness of the business, rethinking the product portfolio, working on a number of alliances. The Rivian investment yesterday is a good example of the most recent thing. The ship is starting to turn, but there is still a lot of work ahead of us.
Well, a lot of the investors have said, look, this turnaround has been slow in developing in the sense that they're not really sure what benchmarks to look for in the future in terms of earnings per share. And your guidance, while you're talking about improved earnings, you're not putting any earnings per share metrics out there. At what point do you do that, where you say, OK, we believe that we will earn X, Y, Z, and you can count on it?
Well, we're comfortable with the guidance that we provided, which is to improve on the results that we delivered last year. I think as the year progresses, we'll see what we say beyond what we're saying today. We have a lot of work to do, a lot of redesign of the business. We're still somewhat concerned about the external environment. We know that that's been something that's been quite volatile of late. So we have a lot of things ahead of us on that front. And then we've got a lot of product launches, too. So I think we're comfortable with what we've provided today. It's going to be a better year for us than last year. And we'll see what more we say as the year progresses.
Bob, I want to quickly shift gears. You guys announced yesterday you're taking a stake, $500 million in the electric automobile company Rivian. How does that play out in terms of down the road? How does Rivian help the bottom line at Ford when it comes to electric vehicles?
Well, you know, it doesn't change the plans that we've already announced to spend $11 billion on electrification through 2022. So that plan progresses. But working with a fantastic startup like this that is looking at electrification and that whole part of the business with fresh eyes, we're going to learn a lot from it. We're going to take one of our new future products off of their skateboard. There's other opportunities that we think we can leverage with them. And, of course, they can benefit from working with us because we know how to scale up. So I think it's a win-win for both. And we think it certainly is a part of the overall approach that we're taking to partnerships more broadly, including Volkswagen and Mahindra and other parts of the business.
Bob, you guys spent $288 million on mobility services, basically autonomous vehicles and autonomous technology. That's what you spent last quarter. But then you hear Elon Musk saying, look, we're going to have robo-taxis, self-driving robo-taxis out on the road next year. Waymo already has one out in limited use out in Arizona. GM Cruise coming later this year in California. Do you need to move even faster in that regard?
We think we're moving at the appropriate pace. This is a very, very difficult technical challenge. This is something that's going to unfold over a long period of time. We expect to have our initial commercialization in late 2021 with the bespoke product. And we think that we're well positioned to succeed in this space. But for all of us, it's going to take a long time for this to unfold because it's a hard problem to solve.
Internationally, you're still losing money in China. But when you look at that market, are you more comfortable where the Chinese economy is right now?
Well, the Chinese economy seems to be stabilizing. We saw on an industry level the SAAR about flat on a year-over-year basis. The government has already announced some things that they're going to do, for example, a reduction in VAT to stimulate the broader economy, but also our sector. And there's rumors that they're going to do more. So the government recognizes the importance of this particular sector. And it's possible that they'll give us a bit of help and stimulation as the year progresses. But overall, I think we're seeing a more stable environment than perhaps where we were a few months ago.
Bob, Wilfred has a question for you. Wilf, go ahead.
Cheers, Phil. Bob, I wanted to ask a little bit more about the electric vehicle market. I mean, would you say that Tesla had been the leader with the most innovation for most of the last 5 years, but have people caught up? Do you see it as more of a level playing field now in terms of the level of an innovation than it has been at any point in the last 5 years?
Well, I think in maybe somewhat different ways, the comment I made about AVs is a little similar to this in terms of how long this is going to take to roll out. It's going to be a transition of a long period of time from ICE to internal combustion engines to electrification. It's going to move differently by region. Certainly, we've watched Tesla very closely. We believe we've learned a lot from them. But we think that we've got opportunities and we also have advantages, both inside Ford, but also now working with Rivian, that puts us in a good position in terms of what our play is going to be in this space.
And
Bob, one last question.
One more for me.
Go ahead, Wilf.
Sorry, Phil.
Go ahead.
Bob, one more for me in terms of the outlook, macro outlook here in the U.S. Are you comfortable, even though numbers may have peaked, that they're sustainable at current levels, particularly following the most recent slight pickup in retail sales data and the like?
Well, our expectation is actually that we'll see a decline in the retail part of the industry this year. It'll be offset in part by more strength on the fleet side of the business. That's what we've seen so far as the year has progressed, and we're very, very strong in commercial government fleet. So that bodes well for us in our truck business. But overall, we still expect the industry to be lower this year, and in particular, retail.
And Bob, playing off of that, I've seen some commentary over the last week or two that suppliers finally feel that they're seeing the rate stabilize in terms of how much lower the industry might move this year into that mid 16 million, high 16 million range. Do you see the same thing in terms of we don't see this continuing to drop off? We see that stabilization in the fourth quarter into the first quarter of next year?
Yeah, we think the year will be in the high 16s if you just look at the light side of the business. We look at mediums, heavies as well, so low 17s. And we don't actually see growth over the next several years based on what we're looking at today. But we still think it'll be an overall healthy environment and strong sales, just not growth.